Salesforce announced its Q1 fiscal 27 earnings late last week, and there's some key themes. These are not themes that necessarily going into the call were surprising. There was an announcement around how they're going to be reporting their earnings. They're going to disaggregate it, talk a little bit about that. Headless 365 was a topic that whether it was Benioff or Washington or Milano, they all mentioned it. I'm going to talk a little bit about that, but it's real simple, okay? Salesforce needs the market to understand that they are getting penetration on their consumption-based products, Agentforce, Data 360, so forth and so on. They need the market to understand that customers are starting to use these products because that's the hook, the consumption-based pricing, right? So let's get into the numbers. Number one, revenue. Total revenue, $11.1 billion. That's a growth of about 13%, slightly ahead of expectations from the market. Analysts were expecting it to come in around $11.05 billion. On the subscription support revenue, $10.6 billion, representing about 14% growth. The remaining performance obligation, right, revenue that's outer years, $67.9 billion, up 11%. Came in just short of analyst expectations. They were thinking around $68.6 billion. Remember, this RPO or the CRPO number is really important. It shows the market what's coming. It shows booked revenue. And in the world of now consumption-based pricing, this is really important because the market looks at this and says, okay, there's a number. And then as the consumption wheel spins, more revenue can come in. That number can actually go up because they're hooked in over the term. And then the consumption will move and the revenue goes up. So again, if you're a customer, it's not just adopting the net new, the AI, the Agentforce, the Data 360, Headless 365. It doesn't matter. The key is this. Customers need to understand that what you commit to up front has implications later, and Salesforce is relying on those implications, meaning growth in terms. So set your contracts up the right way, transparency, volume discount structures, protections, flexibility, so forth and so on. Now let's get into the Agentforce. Let's get into the Data 360. Let's get into those numbers. Agentforce and Data 360 annual recurring revenue ARR was $3.4 billion. That includes Agentforce ARR of $1.2 billion, Data 360 ARR of $2.2 billion. Now Informatica Cloud represented about $1.1 billion of that. Agentforce product customers in production, right? So using Agentforce increased 50% quarter over quarter. Now what I will tell you is that last quarter, their Q4, it was 50% quarter over quarter growth. So it's stalling out a little bit. So that's important to pay attention to. So for all of you customers out there, think about that. Again, it's what I just said. When you're negotiating these deals and you're trying to create leverage, remind them it's not just the dollars. It's not just you becoming an Agentforce customer. It's also the understanding that all of us want it to spin. All of us want consumption, us and you. But set my deal up right because I can't pay more than what's expected. The cost profile, the ROI needs to make sense throughout. And think about it. If you're a customer, all you have to do is put out all those news stories that are going on with different vendors about pay for AI, start using AI, cost above what you think, change plans. If you're going to commit to a 3-year term or a 5-year term with Salesforce, they need to give something back. And then again, consumption, more than 50% of the Agentforce and Data 360 bookings came from existing customers, right? That's the whole idea of the consumption wheel. Now, one of the things I thought was interesting, and I mentioned a minute ago, during the earnings call, they did not talk about the number of customers or number of rather Agentforce deals since launch, right? Let alone how many are paying customers. They didn't talk about that. So they were talking about it, now they're not. Not reading into that, but pay attention. That's important, right? Why did they not? Well, maybe it's not the number they would like to be putting out there. I'm not sure. I'm just going to guess if it was positive, they would keep talking about it. Now, guidance. If you think about guidance, this is important. What are they expecting? They slightly raised the full year FY27 guidance. They're now expecting around 45.9 to 46.2 billion. That would be about 11% growth on the subscription side. Full year guidance, the growth will be about 12% year over year. So again, Slight raise, they're still thinking around 11 to 12% growth. That's important. So if they're trying to pull you in, early renewals, make them earn that, because that's going to help that number. But remember, don't just give them that, right? Don't just give them that. Don't look at those shiny deals that are out there. Hey, if you do this, look at this great thing we're going to do. Unless you have to do it, those deals will be there. Okay, those deals will be there if you negotiate, set it up the right way, communicate the right way. Now, one of the things I want to talk about, Headless, obviously the Headless 360, that was something that was talked about a lot. Think about that as consumption. Think about that APIs, MCPs, right? A market that they haven't tapped into. If you're a customer out there, think about that's accessing in, and you're going to pay for those consumptions. There's not a lot of details out there. I think they're figuring this out. But if you're interested and they're pushing this, drive transparency. Drive them to tell you how it's going to work. Put assurances in place. Because again, it's consumption based. And if they're telling the financial community that's an addressable market that they're going to be focusing on, and they're creating the Headless 360, you need to make sure that they earn that business, not just in cost, but in transparency and assurances. Okay? And then the only thing I would just say is in terms of quotes, there's many of them. They all talked about Headless 360. But I'm going to talk about Milano. He did talk about how we're going to monetize AI. You know, the first one is upgrading existing seats that they already have, right? So think about it. That's important. If they're going to move you to Agentforce 1 editions, that's got consumption in it as well. So upgrades become even more valuable because of the AI component. They're going to find new pockets of seats that are now transformed clouds, right? So they're going to continue to talk about clouds themselves, the underlying Agentforce products, and upselling the value equation, which usually will have AI, which then comes with consumption-based. The biggest way they're going to monetize it, which is the third way that Milano mentioned, is customer-facing use cases by selling flex credits, right? So they build out use cases for the usage of their AI offerings, and then that comes with flex credits, consumption, and that's how they're going to continue to drive revenue, because customers are going to need more, as Milano was saying, put fuel in the tank. So that's key. And then the third one, they talked about Headless 360. That's all about the whole MCP, right? The whole future opportunity around API, that indirect access, for lack of a better term. He mentioned that as a throw-in as the fourth item. So again, growth right around where analysts thought it was going to be. Future growth, guidance, again, similarly. But remember this, everything you give as they push for more, now more than ever has to be done right. And when I say done right, it's not just pricing, it's not just commercial terms, it's literally transparency into how this works and what does this mean in the future.